Welcome, everyone, to the January 25th, 2023 edition of the Smart Energy Decisions webinar series. I'm Deborah Channel, Editorial and Research Director at Smart Energy Decisions. Our webinar series has been developed to help deliver insights and useful information for executives at large electric power users. Today's presentation is brought to us by Energy Cap, and it asks a question: is your energy and sustainability data financial grade? And I think, as everybody knows, energy and sustainability reporting is top of mind for so many organizations today. Recent research puts that figure at 90% of companies saying that they either have or they're developing their strategies to manage ESG practices. But the big question is your data financial grade? And what does that mean to have financial grade data? Is your reporting reliable? Can your report stand up to an audit? Big questions. And in today's webinar, our experts from Energy Cap are going to unpack critical components of financial grade energy and sustainability data. But first, as always, we have some housekeeping to take care of. Make sure to enable pop-ups within your browser and turn on your system's sound so you can hear the streaming presentation. If you need any technical assistance, press the F5 key or Control R to refresh your browser. And if that doesn't work, you can click a help link or submit a question, and we'll respond right away. Speaking of questions, if you want to submit a question during our presentation, you can do so at any time. Just type it into the Q&A box. We'll leave time at the end of the session to answer as many questions as we can. And on your console today, you're going to see the media player with today's speakers and the slides, which you can make bigger and smaller. And there's also a resources box where you can download today's slides and explore other assets that are provided by Energy Cap. And you'll learn about those during today's session. And again, that Q&A box is there. We're really thrilled with the participation of our community at Smart Energy Decisions, especially those of you joining us today. We're a very mission-driven company, and that mission is to help large power users, and that's commercial, industrial, institutional, and government, to accelerate the adoption of renewable energy and facilitate the development of their net zero roadmaps and other sustainability strategies, and most of all, to share best practices with their peers and their partners in energy efficiency and sourcing. This ongoing webinar series is one of many programs and services that we produce in fulfillment of that mission. We've got podcast series, research, newsletters, and news, which I'm hoping you're looking at every day. And of course, our events. And we're very excited about our next event. It's upcoming in March, the 15th to 17th, and that's our second Net Zero Forum at the La Cantera Resort and Spa in San Antonio. Our agenda is being added to every day, but right now we've got keynotes from SSA Marine and Linear Logistics. We've got sessions from Mohawk Industries, Kirk Hill, and others. And we're just about to announce, or I guess I'm announcing now, we have a keynote from the Chief Sustainability Officer of the City of Atlanta, Chandra Farley. So we're very excited about all of those speakers. And buyer and sponsor opportunities are limited, and we also have tickets available for purchase. So go to smartenergydecisions.com/events for more information. And now let's get started with today's presentation. The topic or question is your energy and sustainability data financial grade? Our speakers today from Energy Cap are Dave Ulmer, Chief Product and Technology Officer, and Lalit Agrawal, Vice President of Energy Management and Sustainability. And to get us started, I'm going to bring Dave in.
Thanks, Deborah, and thanks, Smart Energy Decisions, for allowing us to talk with you today. As Deborah was talking through the mission for Smart Energy Decisions, I said, how appropriate it is that we're talking about this particular question. Is your energy and sustainability data financial grade? And why is that important? And as we think about the goals that we're trying to achieve and driving towards net zero and decarbonization, we believe that answering this question well for your organization is an important part of actually fulfilling that mission. And so we're excited to be able to talk with you today. We're going to jump right in with our agenda. So we're going to be talking through what is financial grade energy and sustainability data. And then we're going to be talking about how compliance and standards are really driving action and making sure that as we talk with you today, you are aware of some of the things that are going on from a compliance and a standards perspective and where we see them going as we move into the future. Really, one of the questions to answer today is what can you do to prepare? How can you get your organization ready to meet the needs of today and tomorrow? And then the energy and we're going to provide an energy and sustainability ERP overview. What is it? What does it do? How can it help you and your organization with your goals? And then we'll wrap up with some time for question and answer as well. But let's jump into the first item here. What is financial grade energy and sustainability data? What are we talking about when we refer to this? And I'm going to start by giving a little bit of a parallel. So many people are aware with kind of the progression of ERP software when it comes to financial reporting. If we think about the past, we think about how financial records used to be kept. They were often kept in paper ledgers and records, and that made things difficult. Made it difficult to have that data accessible to others because it lived in one place. It involved a lot of manual entry and calculations, which means it's hard to maintain and update, and there's a higher chance of error with that. And as I mentioned, the data then was limited to the owners of those ledgers, right? And that wasn't sustainable for the types of growth that we've seen, over the past decades in terms of commercial growth and wanting to make sure that financial data and other critical company data could be shared with others. So how did that improve as ERP systems and software were introduced? Well, we transitioned from that manual to electronic records. And that allowed us to also be more accurate because we didn't have to do calculations that, we let the software take care of it for us. It led to real-time updates. People could get instant information to answer the questions of the business. And it reduced or eliminated, in some cases, manual labor, reducing errors, better collaboration across organizations. And it really made the whole process more scalable, reportable, and reliable. And we've seen that on the financial side. So as we talk about what is financial grade energy and sustainability data, what we really want you to consider is thinking about the transition of that type of information, which for many organizations has been kept in spreadsheets over time, to an energy and sustainability ERP. So as we think about that transition, and for those who've already done this, right, you've seen things like transitioning from a situation where you're manually entering utility bills into potentially spreadsheets or other systems. You're reading meters directly yourselves and doing data collection and collation. Again, some of the same problems that we had on the financial side. Difficult to access data, siloed, a lot of manual entry, prone to errors, not very flexible. With an energy and sustainability ERP, we get some of those same types of advantages we talked about on the financial side. We have systems that can help us automatically capture the data. We have systems that are auditable, that give us a financial grade level of confidence in the data that we have. Because if we're not confident in our data, it's very difficult to tell a story and be convincing about where we're headed. It provides real-time updates to you and your organization while reducing or eliminating manual labor. It allows us to collaborate better, and again, support the scalable, reportable, and reliable goals of the organization. So that's what we mean. We're talking about financial grade energy and sustainability data. We're actually talking about some of the same types of benefits that we saw in the financial industry with ERPs. We're seeing the same thing with implementation of energy and sustainability ERPs as well. Why is this happening, right? Like, why are we seeing organizations that are making this type of a transition, and why is this so important? I'm going to turn it over to my colleague Lalit to tell you a little bit more about how the compliance and standards are really driving action at this time.
Yeah, thanks, Dave. I appreciate the parallel with the accounting systems. Even collecting data used to be hobby, and it became a primary focus of a lot of institutions to do what they are doing. The organizations really need a digital solution, really, to do, in today's day and age with the information age that we live in, to meet today's ESG challenges. So a lot of institutions back in the day used to think about sustainability as an abstract and started to do some recycling programs, started to engage in some areas of sustainability, but where we are today, there is absolutely, it is such a complex challenge that you really need a solution that's going to allow you to collect all that data, report on all that data, and we'll talk a little more about that going forward, because what we have been doing is definitely not enough. We need to get to that next level where all that information is put in one place and you can easily access it and share it out of there. The big driver behind this is the pressure that most of the executives for institutions or organizations are facing from multiple different directions. So you have these fast evolving regulatory challenges that are coming into play. You have a need to conduct a comprehensive supply chain assurance to make sure that if there is any disruption in the upstream sources of your material or your supplies, you're not going to have a disruption in your own production of whatever goods or services that you're producing. Many places where you have to have an urgent need for communicating data that's related to the climate change strategy, and many other areas. There are a lot of executives whose bonuses are tied to what the company's ESG performance is. And ultimately, a lot of financial risk is getting started to get attributed to what the impact of ESG is on any business, and that's really driving a lot of the need for collecting this data. But even if the executives at all our organizations collectively understand, okay, we know that there is a need, but now what should we report on? There is a big confusion around the industry as to what kind of information should be publicized and shared with the groups. Good thing is there are some reporting frameworks that have come into existence, and these are a few that we have identified, because without these frameworks, we probably heard of the term greenwashing, because some institutions, some organizations are sharing some data, cherry picking the ones that really fit, tell a good story, but really sometimes it's at the expense of some other data that's not being shared. So I'm able to put a solar panel on my organization or business. I'm only going to share that, but if I'm running a coal plant right next to it, because that's serving 80% of my energy needs, I'm really not sharing that. So cherry picking the data was becoming a big problem with all the greenwashing. So these frameworks have come into existence to try to mitigate that challenge that a lot of organizations have, because otherwise you're comparing apples and oranges. So the Global Reporting Initiative Standard, the Sustainability Accounting Standard Board, SASB, the Task Force on Climate-Related Financial Disclosures, and the CDP, these are the four that have kind of come up to prominence, where they're really helping drive a good framework around what should a typical type of business or typical type of organization needs to do the report on. And these frameworks are very widely recognized now as a comprehensive and comparable information sources. So again, if somebody is reporting to TCFD, you know that then anything that you report will then match what others are reporting. So you're not allowed to do that greenwashing or cherry picking of information. The challenge is that these didn't come into existence all in one day. It has been an evolution. So you can see here, they started off as one reporting framework. They kind of evolved, they merged. Some frameworks influence another framework. Some frameworks complement other frameworks. So it's been an evolution. And in some ways, this evolution is not yet complete. I think this industry is going to continue seeing as more executives are trying to see what kind of impacts they can have through ESG reporting. You're going to see a little more of a confluence of these standards coming into existence, maybe merging and becoming one. So we'll pick on Task Force for Climate-Related Financial Disclosure, the TCFD, for example. So this chart here shows you the steady growth in number of companies that have started aligning themselves with the TCFD reporting. And it's very interesting that this is a financial type of disclosure, because these are a set of guidelines for companies to disclose their climate-related financial risks and opportunities. So if climate changes significantly and your upstream suppliers are unable to provide you the goods and services that you need to be successful in your own business, then that represents a huge financial risk to the viability of your company. So these recommendations that TCFD puts together require the companies to report on their greenhouse gas emissions and what they are doing within their own organization and creating those strategies to manage the climate-related risks and opportunities. Here's another chart that shows the growth, but this time it's broken apart by what kind of sector that these companies are that have started to align themselves with the TCFD reporting support. So you can see that it's not just limited to manufacturing or energy industry. It's all over. Everybody is impacted by the climate change that we are seeing right now. So it's pretty widespread, and it's going to impact a lot of people. Some of you probably heard about SEC ruling that is still in the proposal stage, but SEC has proposed now a climate-related disclosure rule where by 2023, so come January 1st, 2024, companies a certain size will have to start disclosing all their impact on greenhouse gas emissions, and they have to create these targets and transition plans of how they are going to reduce their impact on the climate. This is not final yet, but it's probably going to become final. And when it does, then you will not have a choice but to start reporting on this requirement. Some of you may think, well, yeah, but I'm not that big. I'm a much smaller company, so it doesn't apply me. We'll cover a little later that the way the GHG calculations are done for especially the scope 3 emissions, it's also include your upstream suppliers' greenhouse gas emissions. So you may be a smaller company, but the companies that you sell to, your products or services, they will require you to disclose what your emissions are. So you may not be directly impacted by this SEC ruling. You will most likely be indirectly impacted by this. So in the end, the transparency, the decision-making, all of those things are going to become very important for making sure that you're able to run your business effectively. Dave, you want to share a little bit more about this?
Yeah, well, as Lalit just mentioned, we realize that organizations around the world are at different stages of understanding this. We've got our early adopters who for many years have been collecting information and been reporting. We have others at the other end. Maybe you feel like, our company's not even talking about this. It's really important to note that even if you're a private organization or an organization that you say, well, the SEC ruling as an example wouldn't affect me because of my size or because I don't need to do public reporting. You might want to take a second and think about that, because even companies that don't have direct sustainability goals, maybe it's not something that your organization has set, you're still going to need to report ESG requirements to the rest of your supply chain, right? So if you are supplying to others, even if I think about the way reporting has changed over time for other parts of our business, financial reporting, diversity and inclusion reporting, those types of reporting requirements have increased over time, not just because individual organizations have said that's important to us, but sometimes because of external pressures and the types of organizations we're working with that propel us forward. We have to be compliant. And in the case of things like the SEC ruling or other financial reporting, your organization, even if you weren't expecting it, you may be required to start reporting on some of this information so that you can continue to keep the contracts in place that you've had for many years, in some cases even decades. So if you're sitting here thinking, well, this doesn't really apply to me right now, you might want to second guess, or you might want to stop and think about that a second time, because there are trickle down effects that are going to affect across the board, across industries around the world. So it's something that you and your organization want to be getting ahead of. This is also important to note because for some of you, you may be in an organization where you're saying, I'm the only one who cares about this right now. it's important to know that you may have a much more direct impact from the rest of your supply chain, and you can use that to help propel and get additional interest or activity within your organization to help get the data in line now so that you can meet the reporting requirements of the future. And we're going to talk about that in just a little bit. So we talked about what is financial grade energy and sustainability data. We talked about the compliance and standards and how those are driving action. So what is it that you can do to prepare? Even if you're an organization might be saying, I haven't thought about this before, there's still things you can do now to help prepare. So the first step is to identify and collect data that support your organization's goals and reporting needs. And it's important to note that each organization is different. Now, you might learn from your peers, you might learn from industry groups that are related to the type of industry that you're in, but it's really important for you to think about your organization and think holistically about the impacts that you're having on the environment, the impacts you're having about carbon emissions, and identify those things that are direct and indirect related to your business that you may need to track. Because if you're not thinking about it, I think about the old adage that what's measured matters, right? Or if you're gonna make change, you have to start by measuring the thing that you want to change. That's true here too. When we talk about energy and sustainability goals, you have to first identify what are the things that we should be tracking. And then from there, you can build off of that to then start tracking and building processes around that. Excuse me. So the next step, what can you do? Well, it's one thing to identify and start collecting information. And it's another to start storing that in a way that you get the most value out of that work that you're putting in. This is where you can leverage an energy and sustainability ERP to help you get the most out of all of those energies, out of all of those activities. So you can take information like your utility consumption, the information you're getting from utility bills, your facility information, your transportation metrics, both direct company as well as maybe employee or even supply chain transportation metrics, your operational data, your supplier impacts. Collect all of that, excuse me. Collect all that information and store it in a consistent manner in an energy and sustainability ERP that becomes your single source of truth for tracking and reporting all of your energy and sustainability data across your organization. If you have it fragmented and you have this information and maybe this one person in your organization, they have the transportation data, but somebody else in your organization keeps your utility data, that's going to make it incredibly challenging to provide consistent, reliable answers throughout your organization and to other parties as well. So figuring out what you want to collect, collecting that information, and then being able to do something with it. And that's why we've laid out kind of these next steps here, that when you utilize an energy and sustainability ERP to meet your organization's data and reporting needs, these are some of the main activities involved. You have to first collect that information, make sure that you're setting up processes to make sure that data is not getting lost, valuable information that might have previously been overlooked because it didn't matter as much to the organization. You need to first make sure you have those processes to capture that accurately. You need to make sure that you're allocating and even tagging data in ways that it can be used later on. We don't yet know what some of the reporting requirements or goals of the future might be, but if we consistently capture and record information and tag and allocate it properly to different business activities, to different locations, geographies, operational processes. If we do that, then the data is going to be in a state that we can use it for lots of analysis and lots of reporting down the line. But you have to capture the data. You need to make sure that you organize it and allocate it properly so that then you can analyze it, you can gain insights from that, and then you can provide reporting both within your organization and outside of your organization as well. So we've mentioned a number of times an energy and sustainability ERP, and let's talk a little bit more specifically about some of the elements, some of the aspects that are important. And in particular, we're going to come at it from the types of services that we, EnergyCap, can provide, because we do provide an energy and sustainability ERP. And I'm really excited to share some news, really some brand new information that we're just sharing this week about ways that we have even expanded the capabilities of our energy and sustainability ERP to be that single source of truth, not just for utility data, but also when we talk about carbon reporting and sustainability metrics as well. So Energy Cap provides instant access to validated, actionable data that you can trust to better manage resource consumption, reduce your carbon footprint, reach your net zero goals, and drive massive savings. And the way we do that is through several different aspects of our ERP, several different tools we put together. The one that I'm really excited to share with you today is Carbon Hub. This is our brand new solution that we're adding into the Energy Cap ERP that provides financial grade greenhouse gas accounting. So you can have the same level of confidence when you're talking about sustainability metrics as you do with financial or utility metrics. And that's where the Energy Cap product comes in. It's a portfolio level energy and sustainability reporting tool that allows you to collect information from all of your facilities, from your different utility use, from your utility bills, from your other central plant operations, and able to be able to report on that. That goes hand in hand with Carbon Hub, where you can take that information and then supplement it even more in Carbon Hub to be able to provide some of the Scope 3 or other data elements that you need to record as part of your sustainability plan. And then we also provide Vortex, which provides real-time energy and sustainability analytics. So we talked about the importance of an ERP being able to give you real-time actionable data. A tool like Vortex allows you to do that, where you can gather data from metered points or other building systems and devices that are feeding in, and you can get alerts in real time. So we're not just reporting on what happened in the past, we're actually looking into what we're doing now and getting alerted on opportunities to save energy, to save money, to make sure that we are using our resources responsibly in real time. So you can both do that in the real time, and then you can use other tools like Energy Cap and Carbon Hub together in this umbrella of an energy and sustainability ERP to be able to manage in the real time, as well as provide all of the reporting, all the analysis, not just for today's needs, but also for the needs of the future, which we don't yet know. But it sets you and your organization up well to be able to meet those needs as they evolve over time. So let me dive into a little bit more about what we mean with Carbon Hub. So again, this is a brand new product offering that we just announced yesterday at Energy Cap, and it expands Energy Cap's energy and sustainability ERP capabilities, especially in the area of sustainability, providing more tools and even more granular tools for you and your organization to be able to track this information well and report on it. So let's just take a step back and get everyone on the same page when we talk about the different GHG greenhouse gas scopes. You've probably heard about scope 1, 2, or 3. You may not necessarily know the difference between those. So let me just take a second and just say, when we're talking about scope 1 and scope 2, which are the two that have been historically kind of in the forefront of energy and sustainability reporting, scope 1 are those types of utilities or commodities that you're consuming directly. So that would be burning natural gas, as an example, on your facilities. It also includes things like, and this is one that sometimes gets overlooked, but if you have fleet vehicles and you have gasoline within your vehicles, that's actually scope 1, because you and your organization are directly responsible for taking those resources and emitting greenhouse gases from the consumption and use of those things. That's what we call scope 1. Scope 2 is when you're procuring some type of a resource like electricity or steamed or chilled water from another source. They're the ones who are doing the conversion of the natural resources into greenhouse gas emissions, but they're doing it on your behalf, right? So when I buy electricity, someone else is producing that electricity for me, but they're doing it because I'm asking them to. Scope 2 is when you're reporting on those types of impacts to GHG, and you need to be able to make sure that when you're doing Scope 2 reporting, that you have a good understanding of what are the factors, what are the conversion factors and the things for my suppliers. That's critical to getting Scope 2 reporting right. And those factors can change over time. They're not just static. When we think about electricity, the mix of generation fuels that are used on any given day, it changes. And then we talk about Scope 3. And Scope 3 has really become more of the discussion that we've had in the sustainability areas, and it's also a big part of the reporting requirements that are included with things like the SEC's proposed ruling, where not only are you looking at those things that you have transformed into greenhouse gas emissions yourself, or those that you've asked others to do directly, but other impacts of your business that are affecting the environment. Those include things like the activities that your employees take to go to or from the office, or go to business meetings, or travel, or things like that. Those are impacts we're having on the environment that are the result of our organization's regular activities, even if we're not the ones who are directly transforming fossil fuels, for instance, into greenhouse gas emissions. This is a very broad category, and it involves the entire supply chain. It involves areas of your organization you may have thought about, but it also involves other areas of the supply chain, supplies, things that you're purchasing that are part of your processes, making sure you understand the greenhouse gas impacts of those, as well as downstream impacts of shipping, of other things that are going to others as well. So when we talk about scope 1, scope 2, scope 3, that's what we're talking about. And to get accurate reporting, to be able to collect this information, you need to be thinking about all of those things together, because they all play a role in the impact that our organizations are having on the environment. So Carbon Hub, Energy Cap's latest solution to help you with your energy and sustainability reporting, it does financial grade greenhouse gas accounting. So whether it's scope 1 or scope 2 or scope 3, we help you accurately calculate the impact, the greenhouse gas emissions impact that you're having. And we are able to help you gather that information and provide guidance to be able to record the scope 1, the scope 2, and the scope 3 all in one place. So you can capture that data, you can tag it and allocate it appropriately, because that's the key to being able to report on it well. Next, we help you track your targets. Maybe you have a particular year in the past that you have some baseline set against, and you're trying to reduce your carbon impact relative to past performance. Carbon Hub provides the ability for you to set targets and track your performance on your way to your decarbonization goals. And we also provide new, robust reporting that allows you to, even at a more fine level, be able to drill into your data, to be able to report on it in ways that matter to you and your organization, matter to your direct stakeholders, maybe even to indirect stakeholders in the supply chain or other reporting agencies that you may need to report to as well. So Carbon Hub has all of these different features that add to the energy and sustainability ERP features that have been available with Energy Cap and Vortex in the past. One of the other things to note is we believe at Energy Cap that the data is yours, and the value that we can provide is helping you organize that data and providing ways that you can use that data in ways to even expand the capabilities within your organization. And that includes integrating your data so that you can analyze your ESG data with data from other parts of your organization. You can combine that together. And we provide tools both within our applications and as well as some reporting tools and things. You don't want your data to get locked down into some proprietary set of data that you're stuck forever, right? We want to make sure that we're getting your data, we're organizing it well, but then we're able to serve it to you and to other parts of your business in a way that's very flexible and allows you to get the most value out of all these activities that you're doing to capture and record the data well. That's Carbon Hub. Really exciting, brand new product that we just announced. I'm going to turn it over to Lalit to tell you about the other legs of our energy and sustainability ERP, the Energy Cap product, as well as our Vortex product as well. Lalit?
Yeah, thanks, Dave. Yeah, very excited about the prospect of this new tool that we're really hoping will actually solve real problems at your organization. But while that is a new shiny object right now that we are all excited about, we still have a product that we have spent last 40 years perfecting, and it's almost become a gold standard in many areas of using this tool to at least measure your scope 1 and scope 2 greenhouse gas emissions. So anything that you do on your site for direct impact on greenhouse gases, whatever fossil fuels you're burning on your site, or any purchased energy that you're buying, whether it's electricity, steam, pure water, if you live in a district energy environment. So you are able to at least track your scope 1, scope 2 greenhouse gas emissions, while at the same time you're also doing a good job of measuring your energy impact itself. If there are ways to mitigate your energy consumption. I love the saying that somebody shared with me once, is like, the best way to reduce your greenhouse gas impact, the best way to reduce your impact on the environment is reduce your consumption. That last kilowatt hour that you did not consume never had to be generated anywhere, never had to be transmitted anywhere, never had to be stored anywhere. So that's the best thing you can do. And that's where Energy Cap and Vortex shine, because they allow you to do a very proactive job in terms of energy management. So we'll go through some of the features and functionality we have. But before we do that, again, as I said, this is a 40-year-old product. We've been in business helping institutions, helping clients save energy through the product that we have. We have more than 10,000 energy and sustainability users that are using this product today. We process about 17 billion, that's a billion with a B, worth of vendor bills on an annual basis that those clients are using the energy. And because of the tools that are built into the program, it allows you to manage the consumption, to reduce your carbon, and ultimately drive savings, because a lot of times we hear, oh, sustainability, that's very expensive. We can't do that, or it's going to cost us a lot of money. Well, ultimately, if you want to offset that extra cost by reducing some of your inherent costs, this is an opportunity, because we have used our program to help customers and clients save energy on their sites up to the tune of about $500 million on an annual basis. And this data is from 2021. I was about to say last year, but we are already in 2023. Time's just flying. So we have a proven tool in this ERP that allows you to do that. And I'll go back to the same thing that Dave was showing earlier. You still have to follow this process in terms of making sure first you're doing your best to capture the information that you need, because without that, you're not going to go anywhere. And once you get that in, the tagging, the allocation of the data is supposed to be exactly the way it fits your organizational needs or any other regulatory or compliance needs that you have. So once you capture it and allocate it well, you can do a lot of analysis and you can do the reporting that fits your needs or the needs of any associations or any regulatory compliance agencies that you have to work with. So we'll just walk through those 4 steps really quickly, but it's very important because we've spent a lot of time creating these tools that make it easy for you, because ultimately, if you create a tool that it still requires a lot of effort on your part, then odds are that it's not going to be as well adopted or as widely adopted by our client base. But we have tools that we have created that allows you to capture your energy and utility information very easily, whether it's directly importing it into the system or doing manual entry, or even we have technologies where even your paper bill can turn into an electronic version of energy and utility information through services like bill capture that we offer. And we are a technology company, we are a software company, and we strongly believe in interchanging data with other agencies. So if there are ways that we can extract data electronically, we are happy to do that. We make our APIs public. Anybody can look at our API if you have the tools and if you have the expertise to create API integrations with our data, absolutely have at it. So we support all sorts of data formats because we don't want to exclude you just because your utility will not work with you and they still want to send you a paper copy. We'll work with you and we'll get that information, and we don't want to leave any piece of information out, because then you'll again have that hole in the overall data that will make that data not be as comprehensive. So we want to make sure that we give you all the opportunities to bring comprehensive data into our system. So you captured the data, but then you want to make sure that you can allocate it appropriately. I used to work at University of Nebraska back in the day, about a year ago actually, and I worked there for 2 decades in the facilities department. And utility metering, measuring how much each building is using, used to be a hobby more than anything, because we used to do energy projects and we were like, yeah, I don't know how well that project worked. So we started installing meters. Again, Dave mentioned you can't manage what you don't measure. So we started installing meters, and a lot of campuses I've talked to, a lot of institutions, they don't necessarily always have a meter for each building. Sometimes you have them across multiple buildings are sharing a single meter. You still want to make sure that you can allocate the energy consumed by a specific entity, facility, building, whatever granularity you want at that level. And EnergyCap has an awesome chargeback feature that allows you to target and track that usage, cost, and carbon, and you can measure it for that particular site or entity that you want to do. You can get as granular as you want. It's completely up to you to do that. And what we do with the chargeback process is completely transparent. So it's a nice user interface, so you can start allocating the information as it fits your needs. So you've captured the information, you've allocated it well, now you want to start doing analysis, because you want to make sure that you pay your bills in time, your utility bills, but you don't want to overpay them. So we create utility bill auditing, where we flag anything that doesn't seem like it's following any following patterns that the expected values should be. We do energy benchmarking. You have 10 different buildings in your portfolio. If you're a bank and you have 10 different branches, you want to make sure that your branches can be compared, or maybe one branch is using a lot more energy. Why is it doing that, and what can you do to mitigate that? Measurement and verification is a very important aspect of EnergyCap, where we make sure that if you have engaged in energy projects, the screen here is showing a LED retrofit, for example, you want to make sure that your energy use drops after that. And we will do an auditable grade, financial grade measurement and verification process, where you can actually take comfort in the fact that somebody says, hey, we have an ROI of 4 years, you actually have an ROI in 4 years. And we do a lot of other things with weather normalization and calculating your EUI on the fly. So all those portfolio level energy and sustainability reports and dashboards that you want, they're all available through EnergyCap. And then in the end, you still want to create some reports. So you want to distribute meaningful information to, whether it's your team members or your stakeholders. If you're a campus, you have a president that you may have to share some reporting. We allow you to do that very, very streamlined and as much automated as possible. You can subscribe to reports. You can subscribe others to your reports. You can send them emails. We allow business integration. Dave showed an example earlier to be able to do that, and many other features that you may have needs for. One of these features is extending your data sharing through embedded dashboards. So here's an example of City of Philadelphia, which is one of our customers, that have actually created a dashboard on their public-facing website. And what they have done is they have embedded the features that we have in EnergyCap to directly put the data in that public-facing web page. Now, they didn't need to do any programming. All they needed to do was copy and paste a URL, and voila, it started showing that information on their public-facing website. And as monthly data comes in, as periodic data comes in, this chart gets updated anytime anybody pulls up that website or refreshes their browser. New data will automatically show up. So the sustainability leaders, the energy leaders of City of Philadelphia, don't have to worry about when they're sharing the information. As data comes in, it automatically gets shared. It gets shared in the format that your organization, your company, your institution desires it to be shared in. So just another view of how they are able to do some benchmarking for identifying which departments are using high energy, so they can target them and see if they can help them in reducing that energy. Again, going back to if you reduce your consumption, that's the kilowatt hour that never had to be produced or never had to be transmitted. So that's a portfolio level example of what EnergyCap can do. Very recently, we also acquired a company, Vortex. It's now part of the ERP solution that we have that allows you to go further, deeper into your data. So you may see, yeah, my utility bill went up, but why did it go up? Or my energy consumption went up, but why did it go up? So here's where you can start going into the why and even more to see if you can impact the why and see if you can reduce that back or further below what it has constantly been using. So EnergyCap, again, we still go back to the same model, meaning that you want to capture data. Now, instead of using your utility bills, we are now looking at maybe capturing smart data from your smart meters. You can go down to any equipment level where you're capturing that real-time data from literally any source and any type of device that you have that is feeding data out. Once that data is captured, again, you can do a lot of monitoring, you can check for data quality, you can detect any outliers, and in real time, you can actually do some alerting and alarming, where you can send somebody an email or an SMS and say, hey, this particular meter is not reading well, so see if you can figure that out. It allows you to do a lot of robust analysis and do a lot of reporting to identify those areas further. We support a lot of integrations. Basically, any device that you can think of, we are able to connect with it, and we are able to bring that data in. Again, same idea on the previous energy cap module. We don't want any data to be left outside, because we want you to have a comprehensive view of all the energy information that you're bringing into your data. Because ultimately, when you talk about scope 1, scope 2, scope 3, energy is one of the biggest reasons why you have a big greenhouse gas impact. It's because everything takes energy. So you want to make sure that you have smarts built in, that you're bringing in data, so you're not reacting to, oh, my bill went up last month, so what happened last month? Here you will be able to identify that, oh, something is going wrong right now, so you can take action in your operation and mitigate it before it's too late. So we have a lot of features and functionality. Again, in the interest of time, I'm not going to spend too much time on it, but we can do a lot of cool things for you. A lot of customers that are already leveraging this product and able to make impactful change on their own site, campus, company, whatever you have. So that kind of brings us to the end of our prepared content. We're going to switch into question and answer mode here, Deborah. So we'll let you take the lead on this.
All right. Thank you, Lalit. Thank you, Dave. Great presentation, a lot of information, and a lot of questions coming in. So I'm going to jump right into them. And our first one, this came in early, and I know some of it was answered, but it does bear repeating. So let's go for it. It's the person is asking, what does finance grade data mean? And how do you define energy data as being considered investor grade? And Dave, I'll throw that one to you.
Sure, yeah, I'm happy to talk about that. So as I mentioned in the presentation, I think a good way to think about it is to think about the parallels with financial data, you know, the revenue, the sales, the expenses that we have within our organizations. If you think about someone outside your organization, whether that's an auditor, or maybe it's someone else that you would need to provide that data to in terms of a report, likely they're not going to be very satisfied with a bunch of information that's written into somebody's notebook and it's kept at their desk, and they say, well, here's a record of all of our sales, or here's a record of our revenue over time. They're going to expect you to be able to have the data into a common platform, into a system that is auditable. You can see where the data came from, when it was input, who put it in. They can see any assumptions that you're making on that data, the way you've classified information, and they're going to want you to be able to report on it in several different ways so that you can take that information and your numbers are consistent, whether you decide to use option number 1, option 2, option 3, the data is consistent. If we take that financial, we apply that to our energy and sustainability data. We're getting to a place where that information that we're providing from an energy and sustainability perspective needs to stand up to the same types of tests. That an auditor could come in and they could look at your data and say, okay, you've reported that you have had these types of impacts, or that you've reduced your carbon emissions by this much, or that you've progressed this far towards your net zero goals. It's not sufficient to say, well, I have a spreadsheet on Jim's computer, and I'd like you to take a look at that. That's where we keep all the calculations, right? They're going to want to be able to see the source of the information that you're using. They're going to want to see the assumptions, in this case, the factors that are being applied. Are they accurate? How relevant are they? How timely are they? Did they change over time? They're going to want to be able to see all that information. Has someone mucked with the data after it's been provided? Having financial grade energy and sustainability data means that we can pass the same types of tests that a financial auditor would require of financial data, that an energy or sustainability auditor would be able to ask of our data, that we can say with the same level of confidence, we can meet those needs. Here's the system, here's the platform, everything's consistent, and we can stand by it all. So that's what we mean by financial grade energy and sustainability data.
Great. Dave, thank you for that. And let's go on to our next question. Can you please explain how Energy Cap aligns with the SEC's proposal for climate-related reporting regulations? Does Energy Cap provide the reporting requirements for Scope 3 emissions? Lalit, do you want to take that one?
Yeah, I can give it a shot. So yeah, the program that we have, the new Carbon Hub module of our ERP solution, it's absolutely able to handle any of the Scope 3 emission categories. It will give you the full flexibility of either putting in measured data. So if you have any emissions that can be actually metered and measured, you can bring those in if they are provided by your upstream customers, upstream suppliers, or your utility provider. You can bring those in. But if you have to start making some assumptions, so for example, when you think about employee commute, it's really difficult to measure employee commute, which falls under Scope 3, into our reporting. So if you are only able to do surveys every 3 years to say, hey, how many miles do you drive to work when you come, and what kind of vehicle do you drive, what kind of efficiency does that have, how many miles to a gallon, or if you're driving a electric vehicle. So you can do that survey and collect that information. And then our software will be able to convert that into meaningful greenhouse gas inventory. So we can help you take proxy data and convert it into your Scope 3 emissions, or we can take actual data and report it out into your Scope 3 emissions. So while the SEC rule is still not final and adopted, whether it's SEC or even the other frameworks that we talked about, we are able to collect that information, we are able to allocate it, we are able to tag it. So it doesn't matter which framework that you're aligning yourself with, you will be able to use the Energy Cap ERP solution to help you report on that.
Okay, thanks. That's a good point. As the SEC regulations are still up in the air, there's still actions you should be taking. Right. So thanks for that. And our next question, how do most companies measure their carbon footprint? Dave, do you want to start with that one?
Sure. Yeah, maybe I'll talk a little bit about kind of the conceptual part of it, and then I'll let Lalit handle some of the tactical sides of it. But we talked earlier about this spectrum of organizations, those who've been collecting, measuring, reporting on sustainability impacts for a long period of time, and then those who unfortunately, and this is the majority, if we take percentage, right, the majority of organizations which right now aren't necessarily measuring, or at least not measuring to a reportable standard, their carbon impact, right? So we span the gamut, but I would say that in general, as organizations get started, they start with some of the things that are the easiest to collect their data on, which include utility consumption, because you've got utility bills. People are giving the data to you. They're actually giving you a bill at the end of the month that says, this is what you used, whether it's natural gas or electric or propane or steam, chilled water, all those different things. So they often start with that. And even from organizations who've reported for maybe even a longer period of time, some of them stop right there and they say, okay, well, Scope 1, Scope 2, those are our direct impacts to GHG emissions. But what we're seeing, more progressive, but then eventually I think we're going to see everybody pushed in this direction, is trying to understand better what are our Scope 3 impacts. So they often think kind of thinking close to home, employee travel, employee commute, activities that our organization has directly. And I would say that they continue to kind of expand that circle of impact as they start to think more about suppliers, they think more about downstream impacts. But I would say right now, to answer the question, how do most companies measure it? Most companies aren't doing it today, and that's why we think it's so important to talk about these topics, so that people have an understanding of where they need to be going, and that they understand the tools that are available to help them get there. So that's kind of the strategic side. Lilith, you have thoughts about maybe some of the tactical aspects of how people measure who are reporting, maybe like things like Scope 3, how they're doing it?
Yeah, and you hit the nail on the head. Is some of them are not doing a very good job of measuring their carbon footprint, at least not a comprehensive. I was recently working with one of our clients, and they had some charts that showed, oh, this is our carbon footprint, this is what our goals are, and some data points, and I can't remember exactly what it was. I was like, that does not look right. Are you sure you're actually capturing everything in scope 3? And they at first seemed confident that they were, but as we dug into the data, it was very obvious that it was very limited subsection of scope 3. They were only doing their fleet, if I remember right, and nothing else. And business travel, sorry. Business travel and their fleet impact, which fleet impact is again scope 1. Business travel was scope 3. But they are then relying again on that proxy data. If they had their procurement system where they were capturing how many trips their employees were taking on behalf of the company or the organization, they were able to translate that with some kind of approximation or an estimation on saying, all right, if we fly these many miles, approximately for each mile we emit this much carbon, and they were using those rules of thumbs or industry-wide. So the thing I would say in that particular area is the more accurate you can get in terms of collecting or capturing that data, the more accurate your greenhouse gas inventory will be, scope 1, 2, or 3. But don't let perfect be the enemy of good. If you're unable to capture the final number, if you can find proxies that will help you get to that final number in some form of reasonable estimate, you should do that. And the solutions that we just talked about, they allow you to do that. They allow you to take some proxy data and go through 1 or 2 sets of transformations and get to a very reasonable estimate of what your impacts are.
Okay, thank you both for those answers. And our next question, how do you select the reporting emission factors in Carbon Hub in places where there is no legislation and multiple methodologies that can be used to define these parameters?
Yeah, that's a good question. And what I'll say is I go back to the fact that one of the things that's really important to accurately reporting on your sustainability impact is getting your data collected well, and then having the flexibility to be able to adapt to things like you're mentioning. Now, in certain parts of the country, in certain parts of the world, we have good conversion factors and things that we use, or at least metrics that people have standardized on. We think about the e-grid factors that are available in the United States. We think about some of the EPA factors that have been published, and there's some international factors as well. So our approach in Carbon Hub is that we're not locking you in to just a single way to do it, and we're not forcing our will upon customers. What we do is we provide guidance, and what we have is we've actually preloaded Carbon Hub with those factors, US-based, North American-based, international-based factors that are available so that our customers can choose the emission factors that are most appropriate to their particular situation. But we don't just stop there. We also provide the capability for our customers to input their own custom factors. For instance, you might have power purchase agreements, and the mix of fuels used for your electricity may be different than any other customer in the world. So we allow you within Carbon Hub to also bring your own factors in to manage those and even make them data effective over time so that you can change as things change within your environment. We also allow you to go back if something were to change and make a change. We record what that change was and we can recalculate. So you're not stuck. If things move from where we think they are today and they move towards something else. And an example of that too is using some of the global warming potential numbers from reports like AR4 versus AR5. We actually give the flexibility within Carbon Hub for our customers to choose so that they can have consistency and they can feel confident in their reporting. But we provide guidance. We provide guidance to help them along the way, but also the flexibility. And that's an important part of having a successful energy and sustainability ERP is that it's consistent, but it's also flexible to be able to allow you to meet the needs of your organization.
Okay. Dave, thank you. And as we're just about at the top of the hour, I'm going to say that's a great note to end on. Questions are still coming in. The team will respond to them. So if you type those last ones in as we're ending. And I just want to leave you with the words capture, allocate, analyze, report. That's the T-shirt. That's important stuff. So thanks for sharing that. Thank you to Dave Ulmer and Lilith Agarwal and to the entire EnergyCap team for making today's presentation possible. And thanks to everybody for joining us today. We really appreciate it. And I hope we'll see you all back here on February 1st for the next webinar in our series. And enjoy the rest of your day.
Our pleasure. Thank you very much.